On October 29, 1929, the U.S. stock market collapsed in what became known as Black Tuesday. It was the day optimism met reality, when the American dream of endless growth suddenly hit a wall. In a single session, billions of dollars in value vanished. The event would help trigger the Great Depression. But how could a crash like this happen? And have any changes been made to try to prevent it from happening again? Throughout the 1920s, the U.S. economy was booming. Factories produced more cars, radios, and refrigerators than ever before. Wages were rising. Credit was easy. And for the first time, everyday Americans, not just wealthy financiers, started investing in the stock market. Buying on margin became a national obsession. That meant you could borrow 90% of the money to buy stocks, paying only 10% up front. If the stock went up, you got rich fast. If it went down, you owed money you didn't have. It was the financial version of a get-rich-quick scheme, and it worked. Until it didn't. By early 1929, a few people saw the cracks forming. Economists warned that stock prices were climbing far higher than company profits. But the mood was still euphoric. Even the famous economist Irving Fisher declared, quote, "Stocks have reached what looks like a permanently high plateau," end quote. In other words, the myth was that prosperity could last forever. The truth was that prosperity had become a bubble. The panic began on October 24th, known as Black Thursday, when nervous investors began to sell. Banks and big firms rushed in to stabilize prices, but confidence was rattled. By October 29th, Black Tuesday, chaos hit the trading floor. Crowds gathered outside the New York Stock Exchange, staring in disbelief as ticker tapes printed plunging numbers faster than they could be read. That day, over 16 million shares were traded, a record for the time. Stocks lost their value so fast that some brokers fainted from exhaustion. The market had no safety nets, no circuit breakers, and no federal deposit insurance. When the market crashed, so did the sense of financial security for millions of Americans. In the weeks that followed, banks began to fail as depositors rushed to withdraw their savings. Factories laid off workers. Farm prices collapsed. By 1933, nearly 1 in 4 Americans was unemployed. President Herbert Hoover urged calm, insisting that, quote, "the fundamental business of the country is on a sound and prosperous basis." It wasn't. The same optimism that fueled the Roaring Twenties now blinded leaders to how deep the crisis really was. It's often said that the stock market crash caused the Great Depression. That's a myth, but only partly. The truth is that the crash revealed how fragile the economy already was. Overproduction, easy credit, and income inequality had built a house of cards. Black Tuesday was just the gust of wind that knocked it down. In the years that followed, new safeguards were born, including the Securities and Exchange Commission, the FDIC, and rules to protect small investors, like the Securities Act of 1933, which requires companies to disclose detailed financial reports to potential investors. Franklin Roosevelt's New Deal and, more importantly, World War II production helped pull the nation out of the Depression. But for those who lived through it, the memory of Black Tuesday never faded. Here are other events that happened today in history. In 1777, John Hancock resigns as president of the Continental Congress due to a prolonged illness. In 1901, presidential assassin Leon Czolgosz is executed at Auburn Prison's electric chair in New York. In 1956, the Suez Crisis begins when Israeli forces invade Egypt after the canal's nationalization. In 1969, the first ever online messages are sent between computers at UCLA and Stanford. In 2007, NBC and News Corp launched Hulu as a service to stream recent TV episodes. In 2012, Hurricane Sandy, one of the costliest and deadliest in history, makes landfall in New Jersey. In 2019, the NCAA announces that student athletes will finally be able to benefit financially from NIL. And now it's time for our Today in History quiz. Which of Jane Austen's novels was the first to be published? Sense and Sensibility, Emma, Pride and Prejudice, or Persuasion? Liked learning about the 1929 stock market crash? Then you'll also enjoy this one about another Wall Street incident just 9 years earlier. Tap the screen to keep the story going on Today in History.